All right, so for most companies, particularly companies of any size that have a large number of employees, payroll related liabilities are going to constitute one of the largest groupings of current liabilities. So, whether we're getting paid every couple of weeks, every month, whether we're talking about payroll taxes that are paid every 3 months, there's a whole lot going on with regard to payroll. Um, and all of these things have to be, all these obligations have to be satisfied within well within a 1 year period of time. So they are definitely current liabilities. So it says in accounting and in life for that matter, payroll refers to the amount paid to employees for services that they provided during the period. And company's payroll is important for the following reasons. It says here that payroll and related payroll taxes, we'll get into that more in a bit, significantly affect the net income of most companies. There are a few companies out there that don't have a whole lot of payroll, but even a small company with a few employees, relative to that company's size, it's still generally a major expense. Says here also, payroll is subject to federal and state regulations. So um, whether we're impacting net income as a result of these regulations, uh, just understand that we're gonna have payroll related liabilities to a large number of individuals. And finally, it says good employee morale requires payroll to be paid timely and accurately. And it's probably true that truer words have never been spoken. So we have an example here. It says to illustrate computing an employee's earnings, assume that John McGrath is a salesperson working for McDermott Supply, and his regular rate of pay is $34 per hour, and any hours worked in excess of 40 hours per week are paid at 1.5 times the regular rate. That's sometimes called time and a half. Now, it's not usual that salespeople are paid by the hour, and certainly not $34 an hour. But if we can ignore that, we can get through and kind of see how this works. Says that Mr. McGrath worked 42 hours for the week ended December the 27th. His earnings for the week are computed as follows. So we've got his earnings at a regular rate, 40 times 34 is 1360. And then earnings at the overtime rate, 2 hours times 34 multiplied by 1.5, 102, basically $51 an hour. And his total earnings are $1,462. Okay, so this is kind of our beginning point for the liability. Before we really have to worry about anything else, McDermott Supply Company has a minimum payroll related liability of $1,462. But it can certainly get a lot more complicated than that. So let's look here and see what we've got. Deductions from employee earnings. So the total earnings of an employee for a payroll period, including any overtime pay, which we just had 2 hours of, is going to be called gross pay. So the $1,462 that we saw on the previous slide, that's referred to as gross pay. So from this amount, we're going to subtract one or more deductions to arrive at net pay. So net pay is the amount that the employee is actually paid. And so they've given us some very, very common deductions here. Federal income tax. Most states, not all states, but most states have state income taxes. There are a few areas in the country that have local income tax. Now, this is fairly rare, but the federal income tax is everywhere. State income tax is almost everywhere. We also sometimes will have deductions for medical insurance. The employer might be part of a group policy where the employer maybe pays the bulk of that, but there's a portion that's the responsibility of the employee. So that is deducted out. And then we also have potential pension contributions or retirement plan contributions like a 401k, something like that, that would come out of the employee's pay. So we go from gross pay, subtract all of the relevant items, and arrive at net pay. So FICA tax is a type of tax. Let's see what it says here. It says employees are required by the Federal Insurance Contributions Act, or FICA, to withhold a portion of earnings of each employee. Employers are required to do this. So the FICA tax withheld contributes to the two following programs: the Social Security, which provides payments for retirees, survivors, and then also disability insurance. And this is the larger portion of the FICA tax. And then also what we call Medicare, which provides health insurance only for senior citizens. You must be 65 years of age to receive Medicare. So we have a situation here. Says, let's assume the following. We have $1,000 in gross pay. Social Security tax withheld from the employee is $62. Now that's based on a rate of 6.2%. But we also have Social Security tax employer equaling $62. So if you recall the example that we had a few slides back with Mr. McGrath, and we took his $34 an hour and we multiplied it by 40, and then we took basically $51 an hour and we multiplied that by 2. We added that together and it came up to $1,462. And I don't remember exactly what I said, but I said this is our payroll liability for this employee, kind of at a minimum, that there may be something else. So and there will be something else, because the employer is related to match employee Social Security tax withholding. So I want you to understand the employee portion, this $62 here, is a part of this $1,000. But this $62 here, the Social Security tax employer, is an additional amount that must be paid. So if you have a job, and let's say that we'll just keep it simple, you make $10 an hour, not only does your employer have to pay you that $10 or pay $10, they would also pay an additional, in that case, 62 cents per hour for Social Security tax. Then we have Medicare tax employee of $14.50 based on 1.45%. That is the Medicare tax rate. And then the Medicare tax for the employer. This is another tax that is matched by your employer, $14.50. So the total current payroll liability, let's see here, it says is $153. So the current payroll liability for FICA tax is $153, and that is these four figures: 62, 62, 1450, 1450 comes to $153. So a grand total of 15.3% is going to be allocated to this FICA tax. You may hear people talk about sometimes a self-employment tax of 15.3%. Well, notice this is where they're getting that. So other deductions that we might have to deal with, employees may choose to have additional amounts deducted from their gross pay, such as retirement savings or elective deferrals, such as a 401, 403k, charitable contributions to an organization like United Way, life insurance that is not, in addition to the amount that maybe you get for free. We talked about medical insurance. That would be another example of other deductions. And even if it's deducted from the employee's pay, somebody's still going to have to pay that. So when we look at this example, we're going to go back to Mr. McGrath here, and we're looking at the total payroll tax liability for him. It says, assume that McGrath authorized weekly deductions of 3% for retirement savings, and then also a $5 contribution for a United fund. So something probably similar to United Way. So assuming that he had withheld from the 1462 $257.95 for federal income tax, and then he also had another $73.10 withheld for state income taxes, the payroll liabilities for December 27th are going to be computed as we see them here. So we've got his gross pay here, $1,462. Now, if we look at these deductions, and then we look at our bottom figure here, we've got a positive number here, and then we've got total payroll liability. That's listed as a positive number, and then all these numbers are listed as negatives. That is because these are deductions. So I don't want you to think that we're starting at 1462, subtracting some numbers, and then we're somehow ending up with a number that's higher than our gross pay. What we're trying to do here is illustrate something, and hopefully that works out. So again, basically what we're doing is we're starting with this 1462, and we're going to add some of these numbers. 1462, Social Security tax employee, comes to $90.64. This $90.64 is already a part of this 1462. Social Security tax employer, $90.64. This is not a part of this 1462. That's an additional amount. We also have Medicare tax for the employee and the employer, $21.20. Federal income tax, $257.95. That is a part of this 1462. State income tax, $43.86. I'm sorry, state income tax, $73.10. That is also a part of this 1462. Retirement plan for the employee, $43.86. The employer appears to be matching that figure, so $43.86, and then we have that United fund of $5 here. So the total payroll liability is $1,617.70. And let's just see here. Let's clear all these other numbers out that we've been working with. And bear with me one second. If we start here with 1462, okay, and we're going to add to that the employer portion of Social Security tax, this figure right here, $90.64. And then we add to it the employer Medicare tax of $21.20. And we add the employer portion of the 401k of $43.86. We come up with $1,617.70, and that matches our figure here. Okay. So says here, employers' payroll taxes. Employers are subject to the following payroll taxes for amounts paid to their employees. The FICA tax, we've talked about this already. Employers must match the employee's FICA tax contribution dollar for dollar. So whatever we withhold from the employee, we're gonna withhold that same, or we're not going to withhold, but the employer is responsible for that same amount. Okay, it was $90.62 for one and $21.20 for the other one on the previous slide. However, we're also going to have these two items, what we call federal unemployment tax and state unemployment tax. These are sometimes referred to as FUTA and SUTA. These are items that are additional costs to the employer only. Federal unemployment tax and state unemployment tax are not withheld from the employee's paycheck. So if we were going to go and look at the McGrath example again, and we came up with $1,617.70, well, that's true, but we're also probably on a quarterly basis going to have to pay some unemployment compensation tax and some state unemployment compensation tax based on Mr. McGrath's earnings. So these two items here are additional items that are the employer's responsibility only. Okay, so speaking of responsibility for tax payments, we've got the employee who is responsible for their portion of the Social Security tax, Medicare tax, federal withholding tax. We could also add state withholding tax, and then any of those other items that we talked about, life insurance, 401k, again, employee portion of the 401k, or health insurance. The employer has a lot of the same responsibilities. They have to match the Social Security tax, match the Medicare tax. Then they're also going to have to pay a federal unemployment tax and a state unemployment compensation tax as well to the government. So we've got an example of a journal entry here on recording payroll. It says here, the journal entry to record the payroll tax expense is as follows. So we don't know if this is for one employee or what it is exactly. We just well, it looks like if it's just payroll tax, this will be for multiple employees. So payroll tax expense in total is $2,495. So that is our debit, and this is going to go over to the income statement and impact net income in a negative way. And then, but we want to understand that we record that as an expense because we've incurred it. But notice here, we've got all these little liabilities that we're setting up. $1,500 is that we owe to for Social Security, $375 for Medicare. Looks like we have another state unemployment tax of $540, and then federal unemployment tax payable $80. I want you to understand we have not paid these figures yet. When the preceding liabilities are paid, a journal entry is recorded debiting these four liability accounts and crediting cash. So our next journal entry, let's see here, we don't have it, but our next journal entry is going to be all of these same four items here, but as debits, and then we're going to add cash over here as a credit for this $2,495 when we actually pay these. And then finally, we're going to have, let's see here, some fringe benefits. These are additional liabilities that employers will incur. We're going to talk about that in the next slide, so we may just come back to this slide. This video is starting to get a little bit long, so let's pick up fringe benefits with our discussion of vacation pay.